Welcome back to Extrinsic Trades. So I want to update quickly. Nvidia today 2% down, not a significant downside move, yes, but it was 44 billion. Okay, didn't do much in terms of price action. Nothing said that this is trying to reverse the course or it is trying to sell off more. Indecision candle, I want to say today, even though it was down, but options wise, very highly volatile still. If you take a look at this data by just filtering this stock from the highest implied volatility stocks, TSM, AMD, Nvidia, Hood, Coinbase, you would be overpaying. Historically, implied volatility for these names are not as high, but if you're someone who is trading options or if you're playing with options, you just need to understand that you are overpaying at the moment. In terms of volume, today's volume, 800,000 calls, 541,000 puts were traded total today in the market. And just by looking at the strikes and the largest volumes that they came in, I'm looking a lot more short-term puts and a lot more spreads puts, but I'm not seeing significant calls. And even though these calls, like for March 28th, $900 call strike, I'm going to assume these as a sell because they came in at the, well, they sold it to the bid. So anytime who's selling at the bid, that means they're trying to sell it. If somebody buys the ask, it means they're trying to buy it. But again, I could be wrong. But these were the only two large orders that I'm seeing so far for today. That came in. Actually, there's one as well. Ultra short-term calls. I'm not seeing significant long-term calls except for May. And there are some people who, I mean, I don't know who is this guy, but somebody tried to buy thousands of 1880, 1870 put spread. I don't know if it's put spread or if it's just naked going into this week. So basically someone is saying that this stock could double this week alone, but I don't know, it could be just sell penny. I'm not paying attention to those. And a bunch of other spreads going into the March, so 910, 970. There are a lot of other 850, 810 spreads, 500, 970. So basically this week is pretty big option expiration, triple witching, as they say, indices, ETFs, volatilities, equity, all those assets, options expire at the same day. That's why it is. And also it's generally big option expiration because there are a lot of contracts about to expire worthless, which are outside of the money, of course. And typically, well, market tries to move or stay at the level where it will do the damage to the most amount of like contracts will not get paid. And tomorrow, another big data, CPI, that can move the market as well. But another thing is Nvidia itself has scheduled 18th of March, their presentation, their GPU, I think, right? Conference, GPU technology conference, AI conference. So we will see what happens there. But until then, it can just stay in the range. As of right here, right now on the chart, I'm still watching those levels. What I don't like at the moment, well, it is still bearish if it stays ultra short term below its 5-day simple moving average, which is 881 right now, but it's not too far away from there. It can definitely try to clean that level, but sellers are present, especially after this big move in the morning. I mean, it saw the rest of the day, 4 or 5 hours, pretty much selling. And volume wasn't too significant. Support 840 at the moment. That's the level I'm watching. Right below, I'll be watching breakout level of 820 and then 20-day moving average 790. These are the levels to the downside. I mean, if you're bullish, I mean, has to clear at least pre-market, maybe get back above 900 to get it going. But to get it going, this high delta name, I mean, options need to come in because it has been non-stop call buying which caused this rally after earnings and before earnings as well. But right now, if you take a look at the just daily volume, it wasn't that big of a daily volume today in terms of, let's just filter out by the volume. Well, in terms of overall market, yes, after Tesla, it was the highest traded, 1.3 million total, 1.35 million total options traded, 60% call, 40% puts, and you don't know who's buying, who's selling. Again, these are pretty high volume option activity, and I'm not seeing like certain strike being attacked as if, I mean, from today's option activity in Nvidia. So if it just chops for the rest of the week and just stays in this range and maybe slowly drifts lower, not a problem for me. But I'm still bearish. I'm watching this name to the downside, overextended. So is overall semi-index SOX, whichever you want to look at, SOX or SMH ETF, both SMH, both are overextended. At least 20-day moving average, or ideally 50-day moving average pullback would be a nice level to possibly trade it to the upside. But right here, right now, not enough pullback for me personally to consider this as a dip. I don't think it's a discount dip. This is not significant, especially if you look at it from the highest close, which was 7th of March. Let's measure this move to here right now. So 7.5%. No, I would like to see Nvidia somewhere around 760, 775, 50-day moving average, or even more, all the way, fill these gaps, come to 600, 500. But I don't think it's going to do it fast. Otherwise, overall market would get hit. What? 10%, 12%. But 10% pullback, very, very possible. But right now, market is in a melt-up mode. But semis can definitely take a break. 5-day moving average right now moving sideways. So it can definitely chop. I'm not expecting as much, at least for this week, from Nvidia. And a little bit more bearish and possible that it can test 20-day moving average this week, which is 780. But again, these videos for entertainment, educational purposes only, not a financial advice. Take care, peace. Don't forget to subscribe.